All right, my Alpha Radar trader friends, we are in rally mode. The S&P is up 1.3%, the NASDAQ is up almost 2%, so rocking and rolling. It's going to be an up week. Was it 4 days up in a row? We haven't seen that in a while. All right, so a couple of things I want to go over here in terms of trading. One thing I forgot to mention, last week I had this iron condor on Caterpillar. And it turns out right around here is when it expired, and it just closed right below my line, so I actually got put some shares. It happens. I probably could have closed this out, but is what it is. I got the shares, so I ended up doing a collar just to protect my downside and still hold on to the stock. All right, so here's the iron condor, right? So, we sold the puts. These are the 180 strikes. These were all for July 1st expiration. So we had the 180 puts that we sold. We bought the 175 puts. We had sold the 200 calls, and we had bought the 205 calls. So we're trying to capture that spot in between. We ended up so I collected this premium for the iron condor, but in the end, right here you can see we were put. I put it in the green. So we were put stock, 2,000 shares at 180. So we're down a little bit in it. It's trading at 179.88 or so. But what I did just to protect the downside, I'm going to eventually have this called away from me. So I put a collar on it. So now I'm long 2,000 shares of Caterpillar at 180. I had sold the August 19th 175 calls for 875, and then I went ahead and I used some of that premium to buy 165 puts August 19th. So my downside here in the stock is 165. It's really having a strong day today. Caterpillar is up 4.3%. 179.80 is the current print. So it's right there. It might get called away, but in the end, I think we'll be okay with the trade. All right, this is Progressive. It's been in a solid uptrend, and it continues to be. I had went long calls on this. I think my timing was off because they're coming due soon. I guess I could have held them a little bit to see if we were going to kind of break this line here. I needed to get above 124. It's trading at 120 now. Probably could happen. But that said, when I did do them, we were down in them for so long that I saw some profits today. I ended up taking. So here, the Progressive. We had put this trade on April 21st. So we're holding it for 77 days. It's a long time. Lots of decay there in the time premium, which is why I just wanted to be able to get out of it. So yeah, we had bought the August 19th 120 calls for 410. Today I unraveled the entire trade for 580. It's about a 42% return. So this is Cigna, similar to the Progressive trade. I had bought these calls. I had kept them on for a long time, and this thing came all the way down here to like the 240 range, and these options were basically worthless. So I was like, all right, I'm going to take a full loss here. But look at the past couple of weeks. The stock is rallied back. Right, went from about 240 to 276 today. So I took the opportunity to unwind it. I took a little bit of a profit with it. So I had closed out that position. We put it on June 8th, and these were the August 19th calls, 270 strike price. I had paid $10.70. Now bear in mind, these things were worthless. They were pretty much trading for a penny. So we were patient, and I ended up selling them today for $16, which is about call it a 50% return on the trade. A couple of new trades today. I know the market is rallying. I'm kind of fading the rally because we are in the middle of a bear market, so these things can be very deceptive. So I'm looking at Whirlpools. Now Whirlpool has been in a nasty downtrend. It's 20 days below its 50-day, and these moving averages are acting as resistance on the way down. So today it hit the moving average, the 20-day, and it just can't seem to penetrate. I'm thinking that because this is, and I'm going to do another video. I think I mentioned this yesterday. I think the market is looking more. The market is more worried now about recessionary concerns as opposed to inflationary concerns. So I do think we are hitting a recession. If we're not in one already, we will be soon. And I think Whirlpool is type of that that durable good, disposable income type of company that can get hit pretty hard. So in the end, I went with a bear put vertical here, anticipating that this thing is going to find more resistance at its moving averages and come down. So bear put vertical, Whirlpool, WHR. I had sold the August 19th puts. These are the 145 strike price for 419. I had bought the August 19th puts, 155 strike price for 751. So looking to capture some downside. Because Whirlpool has options that expire on a weekly basis, I also went ahead and I did this bear call spread just to try to collect some premium for next Friday. So as long as this stock remains under 170.34 by next Friday, which is below its 50 days, below its 20 day, below its 50 days, so I have high hopes that that this thing is going to close a little bit weaker. We'll collect our premium. So for this trade, the bear call spread, I had sold the July 15th, which is next Friday, a week from tomorrow. I had sold the 170 calls for 69 cents, and I had bought the July 15th 175 calls for 35 cents. Again, if both contracts expire worthless, I'll get to keep that premium. Okay, so here's Darden Restaurants. Oh, look at this. The market is hitting highs now. S&P's up 1.4. NASDAQ is up 2.1. All right, rally on. Risk on, baby. So here's Darden Restaurants. I'm looking at it. It's in a downtrend, right? So it's hitting its moving averages on the way down, acting as resistance. The 20 is below the 50. And, Darden Restaurants, they are the kind of the big chain franchise restaurants, Olive Garden and what have you. And again, playing into my recessionary theme, I can see why the stock is losing some value here. I went with the bear put vertical, thinking that this thing, it's hitting its 20-day moving average. I think it'll continue to roll over. So bear put vertical. I'm looking to capture some downside here. So DRI, I had sold the August 19th 100 puts for $1.39, and I had bought the August 19th 110 puts for $3.59. Again, going to capture some of that downside. All right, so here's Philip Morris. So I woke up this morning, I wake up early, and I kind of go through some different screens and check the charts, and I came across Philip Morris. So there's a lot of headline risk here. It's binary headline risk, and I think it's tied to the whole Altria Juul fiasco that's going on, right? They're going to take Juul off the market, and they're bringing the courts involved, whatever the case may be. I don't trade headlines. I trade stock charts. So I'm looking at Philip Morris. So this is a classic head and shoulders. Here's your first shoulder, here's your head, here's your shoulder. And it broke through yesterday on big volume, and today it's following through. So from the head to the neckline, we're looking at roughly 10 points. So I'm thinking that could be 10-point downside here, which would roughly correspond with the lows that were hit mid-March. So I'm looking to capture this downside trend. So I went with the bear put vertical on this one. So for this one, and I was so excited about this chart because it seems like such a sure thing to me that I went in this morning. I didn't market order. I didn't try to work it. I didn't do limits or anything like that. And I got a real shitty fill. But that said, I do think that we'll make money with it. So I had sold the August 19th 85 puts for $1. I had bought the August 19th 92.50 puts for $3.10. All right, so let's take a look at Comcast. Comcast CMCSA. This thing is just in a terrible, terrible bear trend. And there's really no reprieve. You can see here, it broke down here in a big way on big volume, and it's just been floating lower since. So here we are, the 20 is below the 50, and it just keeps hitting the moving averages and bouncing lower and bouncing lower and bouncing lower. We had a really nasty sell-off here, tested the 50, came in. So today it's up here testing the 20. Will it come up and try to test the 50? Maybe. But the point is, this thing is in a downtrend. I expect it to continue because I'm a trend trader. So I went ahead and I'm trying to capitalize on some additional downside in Comcast. So the first thing I did with this was the bear put vertical. Bear put vertical, I had sold the August 19th 32.50 puts for 23 cents, and I had bought the August 19th 37.50 puts for 96 cents. Looking to capture that downside. I also did a bear call spread on this. So with the bear call spread, for next Friday, a week from tomorrow, I would like this stock to close below 76.55. 76.55 is right where the 50-day moving average is. So even if it does come up and retest the 50 but can't penetrate, we're still okay. But I think it's going to stay below this range by next Friday. So I'm looking to collect some premium. So here I had so the bear call spread. I had sold the July 15th 41 calls for 20 cents, and I went ahead and I bought the July 15th 43 strike price calls for 4 cents. And yeah, if they both expire worthless, we keep the spread. I think that's all I have for now. I have a couple of other pending orders, but for the most part, I think we're all caught up with the trades. All right, till next time, thanks.